Despite rising interest rates or a jump in cryptocurrency prices, a new report from the World Gold Council says gold prices will continue upwards in 2018. To talk more about this, we're joined now by Peter Schiff, CEO of Euro-Pacific Capital and chairman of Schiff Gold. Peter, in the World Gold Council report, Chief Market Strategist John Reed points to increasing global income as a reason we could see gold rise. But where exactly is income rising enough to make that much of an impact?
Well, remember, a lot of the income is a function of more money, right? If people earn more money because central banks create more money, they use their additional incomes to bid up prices for everything. So I think a lot of prices are going to be rising, not just the price of gold. But I do believe as more people perceive the threat of inflation and see the dangers of what the central banks have been doing, I think the price of gold will rise faster than a lot of other prices as people embrace it as a hedge against inflation and as a store of value.
Well, Vince Lanci, the founder of Echo Bay Partners, said that we could see gold prices hit $1,700 per ounce in 2018, which would be a $450 increase from the current price we see now. Do you think he's right?
I don't know. I mean, I don't know how quickly the price of gold is going to rise. He could be right, but it might go a lot higher than that. But it might not quite get that high. I mean, I think it's going higher. I think eventually it's going to take off, right? It's hard to know exactly when that is going to happen, whether it happens in 2018 or 2019 or 2020. But I don't think you have to know in order to profit from it. I think you just have to buy it, because I think that the path of least resistance for gold is up, and it's been creeping higher ever since the Fed first started raising interest rates back in December of 2015. Everybody's been expecting the price of gold to go down, yet it continues to climb a wall of worry. But at some point, you're going to get more buyers coming in off the sidelines, and the price is going to take off. But before that happens, just buy it now.
Well, earlier this year, we saw gold rally after the Fed announced increases in the short-term interest rates, and the Fed has signaled a rate rise of 2% for 2018, 2.5% in 2019, and 3% by 2020. So going into 2018 with that in mind, what kind of price fluctuations should we expect in gold or silver?
Well, regardless of what the Fed is posturing, it's hard to know if they're going to deliver on those rate hikes. But even if they do, it's going to be against the backdrop of rising inflation, where real interest rates are actually declining, even as the Fed is nudging up nominal rates much too slowly. If you look right now at the yield on U.S. Treasuries in euros, hedged back to the euro, it's at an all-time record low. Not too long ago, you could get 250 basis points of yield in Europe buying U.S. Treasuries and hedging your currency risk. Today, if someone in Europe buys a U.S. Treasury, the yield is about negative 60 basis points. So despite these rate hikes, the yield on Treasuries is lower, not higher, and I think that yield is going to go even lower as the dollar continues to fall against not only the euro, but just about every other currency on the planet.
Well, the dollar is down as Congress is pushing hard to get a bill in front of President Trump before the holiday break. So do you think investors eyeing the dollar and gold are starting to maybe worry over the actual impact of the new tax bill?
Well, they should be worried if they're not worrying now, because what this tax bill is going to produce is much larger deficits. Because while there is some relief from taxes, there are some tax cuts here. It's not tax reform, it is tax cuts. But the tax cuts are going to deplete revenue coming into the government as government spending is increasing unchecked. And in fact, I believe they are underestimating the impact on the deficit, because a lot of Americans are going to change their behavior as a result of the changes in the tax law to take advantage of the loopholes that they are opening up. A lot of people who are now employees are going to become independent contractors, and they're actually going to pay 20% lower taxes than what is being assumed when they are judging the impact. And I also think a lot of the states are going to change the way they tax their citizens. I think they are going to lower their income taxes on wages and salaries and instead have taxes on employers who pay wages and salaries. The impact on the employee is the same, but what it means is that now the employer can deduct those costs on their taxes, and so the government is not going to raise anywhere near the revenue they think from the limitations on the SALT deduction. So you're going to see a huge impact on the deficits, which are going up anyway. So rising budget deficits are very bearish for the dollar because they mean the Fed is going to have to print a lot more money to buy up all the bonds that the Treasury is going to have to sell to replace the tax revenue it lost.
Some have suggested that Bitcoin has been responsible for gold's depressed returns, but others say that it can't be Bitcoin because the two assets have different uses. So what do you think the cause of recent depressed returns on gold are?
Well, I think you got the tail wagging the dog. I think one of the reasons that Bitcoin has been so successful is because gold has done nothing, really. It's been so quiet the last year, and I think a lot of people maybe who might have bought gold have bought Bitcoin, but I don't think that has done much to depress the price of gold, but I think that has done a lot to cause the price of Bitcoin to skyrocket. And I think probably one of the most dangerous things for Bitcoin, if you're involved in that bubble, would be a big increase in the price of gold. Because once the price of gold starts to move, now people want to own real gold. They don't need to own what they believe to be digital gold, but what I believe is nothing more than fool's gold. And so gold going up could really be the pin that pricks the Bitcoin bubble.
Peter Schiff, CEO of Euro Pacific Capital and chairman of Schiff Gold, thanks so much for your time today.
Cryptocurrency Bitcoin has had a roller coaster ride over the last week, hitting a record $20,000 per coin at the weekend before sliding back to under $17,000 on Tuesday. To discuss Bitcoin, let's bring in a couple of expert guests. I'm joined by Peter Schiff. He's the CEO and Chief Global Strategist of Euro Pacific Capital Inc., and also by Nick Spanos, who's the co-founder of the ZAP project. That works to solve one of the biggest challenges in the blockchain industry. Welcome to you both, gentlemen. If I may come to you first, Peter, I know that you're not, from previous interviews, you're not a big fan of Bitcoin. We've seen the roller coaster ride continue. When do you think, if you think this is a bubble, when's it going to burst?
Well, I wish I knew that, but I am sure that it is a bubble. In fact, it's probably the biggest bubble I've ever seen in my career as an investor. And I've seen quite a few bubbles, and I'm familiar with the psychology that surrounds them. And, you know, Bitcoin has all of the characteristics of a bubble. In fact, it's not just Bitcoin. It's the entire cryptocurrency space. I think it's a massive speculative bubble. And maybe we've seen the top and maybe we haven't. I don't know. But I think when the top is in, I think this thing is going to come crashing down. It's not just going to go down slowly. You know, there's an expression that markets take the stairs up and the elevator down. Well, you know, Bitcoin took a rocket ship up, and it's going to come down even faster.
Yeah, Nick, I mean, it's exponential, the curve at the moment, the increase in the value. And I thought this was an interesting point. I heard recently people, you know, chattering away on social media in Russia saying, oh, you know, we really should have got on board with Bitcoin. And I've heard stories of people in the US, you know, remortgaging their houses to invest in it. Isn't that the point they say when it's stocks and shares, that, you know, you really want to get out?
You asking me?
Yeah, I am.
All right, I'm sorry about that. I had some static on this thing.
Oh, so it's okay. I was just saying that, isn't this the point where, you know, people would panic
Bitcoin
at this
is not
point?
a bubble. Well, to answer the first question, Bitcoin is not a bubble. Bitcoin actually is the pin. It's the pin that's popping the legacy financial systems bubble over printing of money, over valuation of stocks and stuff. Bitcoin is a technology. People don't seem to understand, and once they do understand, they come on board. It's a technology, and it's a revolution, just like the Industrial Revolution changed the world. You know, this is an information, calculation, computation, communication, crypto economic revolution that's changing the world right now. And if you don't understand what it is, it takes a little while to learn about it. But once you realize what Bitcoin is, you're going to realize that you're at the ground floor. I mean, was the train a bubble? I mean, there have been bubbles probably in when the trains were invented, but some people stayed blacksmiths, like some people are staying goldsmiths. But some people are staying blacksmiths, and you know, the train's going to pass you by. And then other people became Carnegies and Rockefellers. And
well, let's go to Peter. Peter, it's the future, according to Nick. People are getting in at the ground level. I mean, the beauty of it, the supporters say it's decentralized. It's everything that banks aren't. You know, they're not. The banks can't come and just take your money away when it's Bitcoin and it's the blockchain.
Well, first of all, nobody buying in today is getting in at the ground floor. I mean, if anything, you're going to be left holding the bag. But Bitcoin is not a technology. The technology is the blockchain. And we can have an argument about, how relevant the blockchain is and how important it may or may not be. But Bitcoin is nothing. It's simply a digital token that utilizes the blockchain. So when you buy into Bitcoin, you don't own anything except that one Bitcoin. You don't have any ownership of any kind of railroad. You've got one car, and that car is going to be obsolete. I agree that we have overvaluation. We have a problem in fiat currency. We have a problem in, let me finish. We have a problem in fiat currencies. But, you mentioned overprinting. We have lots of digital currencies. There's 1,300 of them. There's massive inflation of digital currencies. And even Bitcoin itself has spun off Bitcoin Cash, Bitcoin Gold. There's no limit to the supply of Bitcoin-branded worthless tokens that can be created.
What do you make of that point? Because I think it's a fair one, Nick. I mean, when the blockchain forks off and you get different currencies, Bitcoin
hold on
Cash
a second.
and Bitcoin
Can I answer
Gold.
this? I mean, what he said was Bitcoin is nothing. He's trying to say that Bitcoin's nothing, but Bitcoin is a reward system, right, for holding up the blockchain. Without Bitcoin's blockchain is the largest blockchain ever. It's the largest, the first one out, and has the most participants. There's millions of mining machines handling all the transactions and all the information and calculations that are happening on this blockchain. So when you're a miner and you participate in clearing all this information, you get a piece, a little slice of a Bitcoin that's being part of a pool. You get a slice of Bitcoin, and that's the reward system. So yes, Bitcoin is a technology, and the miners get rewarded in Bitcoin for their participation. And there are other currencies. Yeah.
No, the Bitcoin itself is not the technology. It could be the reward, but you don't need Bitcoin to have a blockchain. There are all these other cryptocurrencies that have blockchains, and they don't use Bitcoin. And you can use blockchains for anything. I mean, airlines can decide to put their frequent flyer mileage on blockchains.
Is the one that's
Nick, what about the fact that...
If you don't have a consensus, the largest blockchain is the only one that matters. The largest blockchain is the only one that matters. The one that does the most work,
it doesn't.
The most people that are involved, is the one that's most trustworthy. Yeah. If you can have a blockchain in your pocket and not have any consensus model or algorithm working, meaning you don't have any miners and you don't have any consensus, it doesn't mean anything. It's just a really slow database. And that's what it is.
But what is the value? What is the inherent value of a Bitcoin? What can you do with a Bitcoin to make it worth $17,000? If I have one Bitcoin, what can I use it for? What can I do with it where I derive $17,000 worth of value?
Well, you seem to misunderstand, and a lot of people do, and the people who don't misunderstand actually buy it. The reality is Bitcoin is a technology. Satoshis. There's 100 million Satoshis per Bitcoin.
No, it's not a
so
what can I do with my Bitcoin?
There's 100 million Satoshis. You could buy anything, as a matter of fact. Yeah, I could buy gold at a discount. I go to Paxful.com, and I could buy gold at a discount. I could buy gold at 60% off with Bitcoin.
No, you have to sell. You have to sell your Bitcoin
buy card, you can buy a credit card. You
have to sell the Bitcoin to buy the gold.
What are they called?
Peter, I just want to get back to a question I was trying to ask Nick earlier. People are piling into this now.
Amazon credit.
They're investing money that a lot of people probably can't even afford to lose.
Sometimes.
Just how dangerous are we, the situation we're in now? How dangerous is it, where people are remortgaging and spending savings on Bitcoin?
Look, it is very dangerous. People have been sucked into the mania. They think they're going to get rich quick.
Go ahead, Peter.
Yeah, and look, unfortunately, the people who got in years ago, or even people that got in at the beginning of the year, yes, they have the opportunity to cash out and make a lot of money. But people who are buying into this thing at these prices or higher prices are going to lose basically everything. I mean, these currencies are going to trade to zero or pretty close to it once this bubble pops. Because right now, the only reason that people are buying Bitcoin is because the price is going up. And when it turns around, then they're going to be selling it for the same reason. There's no value in the Bitcoin. You can't use it as money. It's too slow, it's too expensive, and too volatile. So it's not a medium of exchange. It's not a store of value because there's no value to store. It is a pure speculative digital asset that as soon as it stops going up, it's going to implode.
Nick, I just want to look into the future because the price obviously keeps increasing, but you know everything is based on this blockchain. Everyone thinks it's the new miracle. What about when quantum computing comes along in a few years? It is anticipated. Won't that render the blockchain actually very vulnerable?
Well, there's a lot of fixes for that already written, and that we would have a fork and implement a fork that would take care of that. Now, to answer the question before, you said you can't buy anything with Bitcoin. I mean, that's not true. You can buy anything you buy today. You can buy with Bitcoin. You can buy it at a discount. And you can buy credit on Amazon.
No, you have to sell the Bitcoin first.
The coupons people have. Yeah, you go to the site and you plug it in and they give you the coupons.
No, that's after you sell your Bitcoin. You have to sell the Bitcoin. No, you can't. They don't have any.
No,
they don't have prices in Bitcoin
to get the coupon.
Hey, you can buy this for.
You've never been on this. Oh my God.
You use the.
Come on, Peter.
Yes, you're selling your Bitcoin.
About?
You're converting it to dollars.
Well, you got to sell your gold to buy something too. No one's taking your gold. No one's hanging around with a gold test kit, taking your gold. No
Gentlemen, I'm going to have to interrupt you. I do apologise. And also, this conversation needs another good 20, 30 minutes to resolve. But I do apologise. We are about to run out of time. Many thanks to my guest, Peter Schiff, Chief Exec of Euro Pacific Capital, and Nick Spanos, co-founder of the ZAP project. Thank you, guys.